good morning, Dee. How are you?
Hey, good morning, Kristen. Hey, let me fix your hair right there. It's a little bit stuck to the couch.
Thanks.
Got to be the heat today.
Yeah, I was super sad when I saw the heat notification this morning about we're having a heat warning till Sunday.
I feel like it's permanent heat wave till at least October. So, 93 degrees this morning and
at 8 a.m.
Working our way to at least 115, I'm sure.
Yeah.
Well, we're the Tax Sisters of Basque Expertise, and we wanted to start a fun little podcast and some informational videos for you all because we hear so much out there.
Instagram, TikTok, YouTube, we hear it from everywhere.
Stories. I can't tell you how many times I wake up in the morning and I have this little video in my inbox. Hey, Dee, just saw this. Can I do this for my company? I don't want to pay taxes anymore. And the usual answer we give is, it depends, because I think a lot of times we see these information out there. We think, hey, this is like some hidden trick that nobody knows, even though it's out on video, that everybody must try. And I think part of the problems with those is they're not one size fits all. There's lots of things out there. There's lots of ways to work within the tax code, but
we tell people all the time, it's like a puzzle. Like your piece has to fit inside a bigger picture, because things that you are like, that sounds perfect for me right now, I want to save all this money, might really affect you 2 to 5 years from now because you have long-term goals.
Right. And sometimes even your entity structure or something will depend on how you take certain deductions and so forth. So we wanted to just get some more detailed information out there around, what some of the facts are around the tax code, what's fiction, or, really specialized into certain scenarios, and give you guys some examples of how they work, and and try and get into a little bit more granular with some of that information.
Yeah.
So I think that that's what kind of drove us to want to be able to do this and put a little bit more structure around some of the stuff that you see out there.
Yeah, definitely.
Basque has been in business for 20 years, started it back in 2004, and it's been growing very rapidly over 20 years. Kristen has joined us about 5 years ago, and combined we have over 25 years of tax and accounting experience. I am a former NASA engineer, which I know people laugh at. They come to my office, they see space rockets.
All of our NASA stuff.
All over the place. And
it's kind of how we branded Basque Expertise. You can tell if you take a peek at our website that we have our logo, our mascot. His name's Commander Jack. You'll see him flying around on our website on his spaceship, and we've kind of just taken hold of that, being, space-like here.
It's a original passion of mine. I used to tell everyone since I was 5 years old I was going to work for NASA. I wanted to go to the moon and do all these, crazy things as a kid.
Yep.
So I love to say that I lived my dream. But during the course of that journey, I've really learned things about myself and what I enjoy doing and working with people and coaching them. And, I got into tax in a kind of a roundabout way. I started out in Buffalo, New York. Well, actually, I'm from Long Island, but I like to say I'm from Buffalo.
Talk about the cold, huh?
Yeah, talk about the cold, and moving to another extreme. And then from there, off to Houston, where I did work for NASA. Different kind of hot, definitely not a dry heat there. You might need to shower at least 4 or 5 times a day. That's what I found. But it was very, the journey is what I think brought me to this point here. I've been living in Arizona 27 years now. I lost count, to be honest. I think I moved here in 1995.
Okay.
So been here a while.
That's a while.
Definitely.
You can say that you've been here. You're a full-time Arizona person.
I kind of feel like I am, at least as an adult, for sure. My family, my children are all born and raised in Arizona. So, yeah. I do love it here, and I love running this company and everything that we're doing. Kristen, tell us a little bit about what you've been up to.
Well, I'll tell you a little bit about myself first. So I was born and raised here in Arizona. So everyone thinks that's the craziest thing. And they're like, you were born here? And I'm like, yep, born and raised here. I'm a all-around suburb girl of Gilbert. I have a husband, 3 kids. We live just east of here in Mesa. But I kind of found my way to Deirdre. We had a working relationship before I started working here. I was in sales, so we kind of found each other through that. We were correlating on business stuff, etc. And after I was moving on from my last position, we found ourselves in this like, hey, what are you going to do? And I was super unsure because I was still out of college at that time. I was, I think, just 1 year out of college.
Something like that. She's a youngin'.
Yeah, it was just 1 year out of college, and I really didn't know what to do. And Deirdre was like, well, you could come work for me, because we were really like bonded personality-wise. We got along so well, even from the get-go. She's like, I'll teach you everything I know in tax and accounting. You just have to be willing to learn. And I was like, yeah, I'm willing to learn anything, right? And I really found my love for our business in general now in the building of the relationships, meeting with clients, seeing what their goals are, learning about their families, taking their short-term goal, like, hey, I'm going to start a printing business out of my garage, and now they're running million-dollar companies. So seeing our clients flourish and making those plans, business models, all those things, and then also giving them the correct and proper information to help them grow tax-wise, and taking advantage the proper way, has been really rewarding. So
it's interesting. We've acquired lots of stories, lots of tales, good, bad, and ugly.
Yeah.
But we like to talk about the good ones, of course, and how they've overcome certain challenges. And throughout our stories, we will tell you real life examples of certain things that have happened and
scenarios, all that stuff,
and give you ideas on how some of these things work in practicality, which I think is some of what's missing in a lot of the information out there right now.
Yeah, I feel like what we see right now on TikTok and Instagram, it's these flashy posts, right? Like, here are the top two. Yeah, here's the top 2 things you need to do to pay no taxes this year. And they're not practical, right? They take situations that may have worked for that single person in what they're doing for only that 1 year. And that's not taxes, right? We're going to pay taxes till we die, unfortunately. So we have to think about both short-term gains and long-term gains. We have to figure out what's best.
So I think in these first episodes, we really want to talk about business and entity structure. And what does it mean to be an LLC? Because that's usually what people say, I'm an LLC. And what does that mean when it comes to our tax code and how you're taxed and how you navigate certain deductions and, when you might want to take different tax elections and all of that. So in this first segment, I know we want to get into
sole proprietorship.
Sole proprietorship. That's the most basic of all LLC types that are
running around there right now.
And actually, it doesn't really need to be an LLC. It can be what we call an informal sole proprietorship without an entity. And we'll talk today about, what does that mean to be a sole proprietorship, formal, informal.
Yep.
What does it mean from a tax perspective? What's the pros? What's the cons?
Yep.
What types of people would fit in that kind of structure generally? We'll give you some examples of that. We'll also want to get into some of the common myths we hear, or I like to call them the general statements of everybody should do this or write this off or do that. And while there's some fact behind some of these ideas, we want people to understand when they're useful and when they can use them versus when they can't. So we'll go into some detail around that so that we can kind of understand a little bit broader around what a sole proprietorship is and when it might be useful.
Yeah, let's start with what is a sole proprietorship. I hear a lot of people just say, I'm an LLC, but the IRS, that's not their term, right? Let's talk sole proprietorship.
So so there's 2 ways to look at a sole proprietorship. One, basically, I would say the most common thing I hear is, okay, I'm a contractor. I get a 1099 from, for sales for multiple companies. I get these 1099s. Sometimes people don't think of them as I'm self-employed or I run a business, because there's nothing formal around what they're doing.
It's just their side gig.
It's just their, it could be their main gig too, but they're making this money on a 1099 and they haven't kind of come to terms with I'm self-employed. And in that regard, as soon as you have that 1099 or that something that's not coming through a paycheck, it could be a side gig, definitely, then you are operating as self-employed as a sole proprietor.
Okay.
A sole proprietor, it's just you, right? Nobody else, just you.
Just me, myself, and I.
Yep. So you usually see some consultants and salespeople, even sometimes, your basic contractors, painters,
True.
handyman.
Well, we see it a lot now. I think the most common one we see nowadays is solar sales.
Solar sales is a big one.
Yeah.
These people come out, they're just selling for different companies. They get these huge amounts of payouts, and they have a hard time mentally understanding that they're running a business in reality.
Yeah.
So,
well, technically, in a sole proprietorship, there is no distinction between the business and the owner. They are in one.
And I think that's what catches a lot of people, because the formal side of a sole proprietor is I will get people that say, but I have an LLC. I'm a business. So they've woke up to the part that they're running a business. They set up an LLC.
Yep.
And they're a single member LLC, so it's just them. However, they feel like, well, I've got a business name.
Yeah.
I've got what's called a tax ID number for my business, which isn't necessarily required in a sole proprietorship, but does help for situations, and we'll get into that as well.
Yeah.
But when we look at these LLCs with single members, as you were referring, is the IRS doesn't really recognize that type of entity. It knows you're an LLC, but LLCs can be taxed multiple different ways. And when you're a single member LLC and you go out there and get your tax ID, chances are you're just taking the default or whatever the IRS gives you.
Right.
And that is unfortunately called something that we like to call disregarded entity. So, and what the IRS, that means is IRS says, great, we see you have an LLC, we'll call you by that name. However, for tax purposes, we're going to disregard that. Still going to treat you like a sole proprietor.
Yep.
Yeah, and you'll still see people filling out Schedule C on their 1040.
Yep.
Because that's where sole proprietorships go. Regardless of how well or how much money they're making, that is, in a nutshell, what a sole proprietorship is. So you can have an LLC. You may not have an LLC.
Yep.
The biggest differences, I would say, between formally having an LLC and just running it ad hoc is more liability protection,
right?
Not really a tax distinction. Both going to be taxed the same way from the state and federal governments.
Yep.
But the LLC does give you some type of, that's why they call it limited liability, where if you're a sole proprietor with no LLC, you have unlimited liability, which is not two words you really ever want to hear together, is unlimited and liability, because that means that, if something happens, someone wants to sue you in your business, they can attach your entire life, your home, all your assets, because you have unlimited liability.
Right.
So we do like, even in a sole proprietorship, no matter even how small they are, I'm very pro put an LLC in place either way, even if it's small, just from the perspective of protecting you and your family down the road and those assets that you may or may not have.
Tell me a little bit about, like you said, forming the LLC. I know a lot of people, and the Instagram posts are all out there. All you have to do, it's easy, it's free, just go to the IRS site. That's all you got to do. You'll get it almost instantly, your EIN number, and you're good to go.
Yeah, that's a good one. I can't tell you. I think we must spend at least a solid one day a month, a good 8 to 10 hours a month, fixing people's entity structures.
There's so many websites now. Quick and easy. Here's how much it costs. I'll get everything done with you.
Business. Yeah, and I'm not advocating for any of those, and not because they can't be useful tools if you know what you're doing. The problem is, I think people assume that those tools are giving them advice, kind of like TurboTax, where it's really just software that you're plugging and playing, and all
what you get.
You get what you put in. So I think the downside of implying that those are so easy is not understanding the tax implications, where people can get these LLC set up, they get a tax ID, they have no idea what that means from a tax perspective. And usually when they go to get their taxes done, and they get their bill that they owe all this money, that's when they kind of figure it out. And they're like, well, no one told me. I just did this on my own. And we have to backtrack fixing a lot of things. So that's, as we go through these different entity types, you're going to hear us talk more about.
How does it work between the IRS and the state? You said that you have to pay both federal and state taxes where state taxes are applicable. But in regards to forming your LLC, how does it work? How is it different for the IRS and the state?
We'll have different filings. We have every state's going to have their own type of formal filing for an LLC, or for sometimes their business registrations or licenses that have to come into play as well. Whereas once you have that, then you can apply at the IRS side that says, hey, here's my business. I'm formed in this state. Most people don't want to use their social security numbers in a sole proprietorship world, so they get these unique tax IDs for that. So you have to have both. And I think people misunderstand. I've seen people just get a tax ID and just give themselves a name, or I've seen people just do a state filing.
Right.
And 6 months later, they realize they didn't have a tax ID number. So knowing how that stuff functions is definitely going to be the basis of what we're going to be talking about right now.
Right, yeah. And we tell a lot of our clients, people who come to us just newly, and even our clients who are still ever growing their house of, businesses, that the foundation is so important, because when people get going, right, they could be a whole year into things and they've been, running their business, and they come to us after they've been 9 months into the business. They're like, yeah, I have all my stuff done. We're like, okay, let's do taxes. We go to file their taxes, and we are so far away from having everything we need, right? Because they just weren't aware. They, just do simple Google searches, and the internet is just full of misinformation. So we always tell people the foundation is so important. Let's get things done the right way, the proper way, so they can worry about, I need to just run my business and make it profitable, whatever it is going to be. And all of the miscellaneous paperwork, all that other stuff can be left to the professionals to get done right.
Yeah, absolutely. And we'll harp on that quite a bit through a lot of our episodes and stuff that we're talking about. But let's get into some detail around sole proprietorships.
Yeah, for sure. Let's talk about, how about first we'll start with record keeping requirements. What's obligated or necessary from the IRS, but what are some good details around what they should be doing record keeping wise?
Well, I tell people record keeping, because people think, it's not formal. I don't do that much. I don't make that much. They just kind of spend and merge their personal and business expenses into one account. Right. And the problem with that is a term called commingling that we'll talk a little bit more about in this segment. But record keeping becomes really important to really justifying the deductions that your business can and likely will take in time that you do your tax returns.
Right.
There's a lot of afterthought put into record keeping. And by the afterthought, I mean, people don't do it, or they're like, I'm just getting started and I got so much on my plate.
Right.
So they wait and they wait and they wait. And then, it's January, February, they got to do their taxes.
They got to back into a whole year's worth of information.
Or shoe boxes. Shoe boxes back in the day, not so much anymore. Now it's maybe more digital dumping that people will do on their accountants and sorting things out. And the problem with that is, what do you forget? I don't know about you, but I almost forgot what I had for breakfast. But
I know. I agree. If someone's like,
I don't know how you'd remember a whole year ago what you did or didn't do in your business.
Yeah. If anyone asked me, where did you go last week? Tell me every place you spent money at. I'd be like, I have no clue. I'd have to look at my bank statements. And that's what people do, right? When they come for us from taxes. Like, hey, I need to know. Here's the things I need to know for your tax return. And they're like, well, I didn't keep track of any of this. And, well, I didn't do it for you either. So we have to find and teach people the proper way. Like, hey, if you create the foundation to doing this properly on a weekly, monthly basis, you won't have your tail between your legs when it comes tax time.
Right. And then I think the other side of that is, we talk about record keeping, and the purpose of record keeping is to justify your deductions. When we talk about sole proprietorships, there's so much information out there. Deduct everything, personal and business expenses, just, push it all through the thing. And, at the end of the day,
no one will pay taxes.
No one will pay taxes. There's no taxes involved.
Yeah.
And obviously, just on the surface, people would want to laugh and be like, that's ridiculous sounding.
It's crazy.
It's crazy, but I would say,
8 out of 10.
Yeah, probably a good 80% of the people out there think along those lines. And I'll give you a really good example why that's bad.
Yep.
Someone comes to me and they say, here's my income and expenses, and it looks like they made no money. And guess what? They don't owe any taxes. Guess what their tax return says? They made no money. Big goose egg.
Right.
Well, interest rates are hopefully dropping here soon. I don't know about housing prices in Arizona. They're still kind of up there. But, I want to buy a new house. You want to move someday?
Yes.
Well, how are you going to get that loan when you make no money?
I know.
And people try and tell their lenders, but I do make money. And they show them their 1099s and whatnot, and they don't understand that their tax representation is also their lendability.
Mm-hmm.
It's their financial health. It's a lot of different things, and you can't go back in time to change that.
No.
So
that's why I mentioned just like 10 minutes ago that why you have to plan 2 or 5 years out or even farther, because the things that you're doing today, like, oh, I don't want to pay any taxes, will affect you in your future plans, just like the scenario you stated.
I can't tell you, especially during tax season, how many clients call us up and be like, I'm buying a house, but they said I make no money, or how come my tax return shows me this, because I don't really fully understand it. So there is a lot that foundation on record keeping becomes really important. But I think the flip side of that is, what am I record keeping? What is tax deductible?
Yeah.
What's considered a business expense and what's not? And obviously it's going to depend a lot on what your business is.
Right.
Are you a printing business? Are you in sales? Are you selling homemade salsa on the side? Or,
That'd be it.
She makes really good salsa, by the way.
Yep.
I'm just going to say. That's why that
Not
came
for
up.
sale, though. Only family.
Only family, but I want some. So
Yes.
Anyway, so, there's going to be different types of deductions that are normal for those types of businesses.
Well, tell me what the tax law states for necessary deductions. There's 2 words that they say they have to be for your business.
Reasonable and ordinary.
Yep.
Very basic words in this English language. Reasonable comes up a lot in the tax code.
Yeah.
And ordinary is another one. And I think people interpret those as they're so loosey-goosey, these words, that means anything can be reasonable and ordinary.
If I can say it's reasonable, right?
Correct.
Like, oh, I think this is necessary for me, for my business, it should totally count.
Exactly.
Yeah.
We see a ton of that, and the problem with that is that's not really what reasonable and ordinary means.
No.
And it's going to mean different things based on what your business is doing. See if we can come up with some good examples here, but...
Yeah, why don't we just do, like, solar sales?
Okay, solar sales.
Yeah.
Is it reasonable to say that I have, I think a big one, actually, it comes out in a lot. I'm just going to use it as a broad example because I think it comes out in lots of different businesses, is travel.
Right. Reasonable
And ordinary around travel. I get people that are, all right, let's just call them an electrician for, even solar sales if it's local. Where does travel come in for your business? Now, in sales, travel may come in quite often because you're required to travel either city to city, state to state.
Seminars, educational things.
Correct.
All those things.
So in lots of different cases, there'll be, reasonable and ordinary, expected travel, for different industries, but some are not. And I can't tell you how many times, the electrician or somebody, we're not just writing off seminars, but, they're taking trips to Disney World and they're calling them, office parties or whatnot. These are very highly scrutinized parts of our tax code. Travel, entertainment, or meals, these are very big deals. So reasonable and ordinary has to be interpreted properly and what's normal. And your accountant can obviously help guide you with that. Different industry types are going to have, different standards of what's expected. You know, in sales, statistically, you're going to have probably higher travel expenses than you would if you were selling salsa at farmers markets locally.
Agreed.
Yeah. So you might go to a farmers convention, but you're not.
Yeah, you may travel to the local next city or whatever, have to go a couple hours away. That would make sense, right? I'm traveling to go, promote my salsa, but you wouldn't see a salsa vendor hitting up 10, 20 different states a year
to
promote their salsa.
Right.
Yes.
I guess I'm really hungry because
I know.
I want
I'm
the salsa.
starving. It's still so early, so we got to pull back on that.
I know.
We got to pull back on
Anyway,
that.
that's what happens in the heat. Get hungry.
So that's about ordinary, necessary, reasonable. Tell me about the record keeping requirements as a whole. Like, should people be, you know, we get a lot, Excel sheets, stuff like that. What is the best means of?
You know, we're talking about sole proprietorship here, so we're always going to see a lot more laid back type of record keeping. And I'm not saying that there's completely anything wrong with that. If you're only running a little side gig here or a small business that stays about the same size. So, you know, spreadsheets are okay. In this day and age, I'll take any type of record keeping because I feel like there's so little of it. You know, obviously as accountants, you know, we like profits and loss and balance sheets and
A full set of financials.
We like financials, no matter how big or small, and there's reasons for that because that type of record keeping
is sustainable.
Yeah, well, it's sustainable. It can grow. If you ever sell a business, it's important. If you ever get audited, you have justification and details around everything that you're doing.
Buying assets, getting loans, all those things.
All those things. So, you know, anybody doing any type of, you know, legit business, especially if it's full-time, I'm obviously going to tell people the importance of proper record keeping, detailed record keeping.
Yeah.
Again, getting back to those foundations that you keep referring to.
Yeah.
Because strong foundations allow you to have a base for your business to grow and build on.
Right.
You know, think of a house built on dirt versus a slab. It's no different.
Right.
You know, so record keeping when you talk to an accountant, especially a tax accountant, because we like to see all the details behind the numbers, we think that's one of the strongest foundations you can have. But when we're working with a lot of businesses, we do understand that sometimes, you know, spreadsheets happen and things like that. And that's
people grow into it, right?
And
you
that's
can
okay.
do spreadsheets. It's not saying that they're bad. It's just there has to be all that detail behind it, right? Like in an event of an audit, like they're going to want to see all of your backing data. Another important thing we always press all the time is that you really have to keep things separate between your personal and business life. That's why we always recommend, hey, even if it is a side gig, you should separate that money from your personal money by getting a separate, business bank account, all those things.
Yes, definitely. Just dividing that up, not commingling those funds. And commingling in a sole proprietorship is not as serious as an offense as it is when we start getting into some of these other entity types.
Right.
And the reason for that is because a sole proprietorship really has no tax distinction from yourself.
Right.
Everything is flowing through yourself, paying taxes yourself, all of those things. So there's really no distinction between the business and you. So that's why we can, there's a little bit more flexibility in some of those things. But I think as businesses grow, you really want to have that type of structure, and early habits obviously are sustainable.
Agreed.
It's much harder as you get busier to then go back and try and create the things that you didn't do in the past.
Right. Yeah. Tell me a little bit about the benefits of being a sole proprietorship compared to, let's say, a corporation.
Well, and we'll definitely get into corporations here, but a sole proprietorship is just it's the simplest form of a business. Yeah. There's very little, so you can have a sole proprietorship without formal entities, without formal tax IDs even. You, a lot of times, don't even need to register in most states what you're doing. Right. It's kind of a part of you individually. So they're the simplest form of business that you can run, getting off the ground. Just tax-wise, no distinction from yourself. So again, it kind of simplifies things because it's keeping everything kind of as one. Even if you did form an LLC, the ease of formation and getting things done is much simpler. Right. Now, it doesn't mean you don't have to comply with, state tax laws and stuff. If obviously you're selling, or I'm still stuck on this salsa, but if you're selling salsa, you might have to register with the state to collect sales tax and do stuff like that. But it's definitely the simplest. we start getting into corporations, partnerships. You probably heard the term S corps. Completely different regulations,
obligations, requirements, all that stuff
that we need to do, and we'll get into that. So they get more complex, but sometimes they have better benefits,
True.
Especially tax-wise. So they do come in handy, but we see a good percentage of businesses out there still operate as a sole proprietorship.
Right, and we see a lot of them start there and grow into other entity options that there is. Do you see any disadvantages of being a sole proprietorship? Is there a couple of examples right off your mind? So if people were in there like, oh, I have been a sole proprietorship for a couple of years, but maybe it's not for me anymore.
It's almost like the pros are still the cons, right? Because in a sole proprietorship, some of the disadvantages are because there's no distinction between you and the entity type. So for liability reasons, obviously, like we mentioned earlier, that's going to kind of tie you and your personal home and all those things. So if you are somebody that does have a lot of assets or a family, those, even just for liability purposes, that would be kind of that would be a big downside. Okay. Another one would be tax flexibility, because as businesses grow, you deal a lot. In a sole proprietorship, we have what's something called, if you probably all have heard, called self-employment tax. Yeah. Self-employment tax is just a wonderful part of the tax code, so that we don't get around paying Social Security, Medicare, and
like the rest of us do in our regular paychecks.
Right. So, that becomes your business responsibility, and that whops another 15.6% or so on top of your regular income taxes that you have to pay. So as you are growing a business, maybe seem pretty, and I've seen pretty simple ones now. I got a single owner, no dependents, making $50,000 in profit, as a contractor. Right. And they can't understand why they owe $15,000 or, something, astronomical in that situation, because they feel like they really barely have anything to live on, and all of those things, or the money's spent, those kinds of things. And I think that being aware of what that self-employment tax is, and it's hard to get around it, and it's going to be different, based on your situation. A single person running a sole proprietorship is going to have a different threshold to where that self-employment tax is going to hurt them versus, say, a married couple with 2 kids. Exactly. That has a W-2, and they have a bit more deductions to take because they have a house, they have, child tax credits and stuff like that. And that's why we get into a lot of these things, that a sole proprietor, for the guy still working by himself making $50,000 is probably fine, but maybe the married person whose wives might be making $150,000, and we're slapping this on top of that, their tax bracket's going to be higher. That self-employment tax is going to be, is going to hit them a little bit different. Right. So you'll get different recommendations of how to structure those. So the sole proprietor is really easy, but it's not always going to be the best fit, especially if you're trying to minimize your taxes. Okay. In the long run. Yeah. So it has its purpose. I think everything we're going to talk about has its purpose. Just a time and a place. It's just a time and a place. Yep. Yeah. So I don't like when I see these videos out there, it says, you never want to be a sole proprietorship, or you always want to be an S corp. And because there is no always. The way things are structured, it really does depend on how we put these puzzle pieces together. Yeah. And what that situation is. Right. And the more complicated it is, the more analysis has to be done, because maybe I have plenty of people we work with that have 2, 3, 4 businesses they're running. There could be all different structures, and we're trying to maximize their tax situation, minimize their tax situation, and maximize the benefit, and we have to look at all these different pieces. So it does become something that evolves, but it's a good starting place for a lot of people. Right. I agree. One of the most questions we get a lot are like, what are the most common deductions? What can I do as a sole proprietor? If I buy this, truck, does it depreciate? Or can I buy this? What happens with it? So maybe we should hit a couple of those. What are the most common deductions
for business expenses.
Well, and again, we got to look at what type of business it's running. Most businesses will have some type of cost of goods sold.
Right.
Even if you're a contractor, you might have supplies you have to buy.
Right.
Even outside labor you have to pay. If you're selling product, you probably have supplies again, materials you have to buy. So your direct, I call those your direct expenses. That's why we refer to them as cost of goods sold. These are the actual expenses it takes to produce the product or service that you're going to sell.
Right.
So, for example, in our case, we're service industry, people think, well, what is cost of goods and service? Well, usually it's software,
Yep.
And technology, and a big part is labor. So we tend to take a look at the business and we try and structure those direct costs that this business can't even sell this product or service without incurring these costs.
Yeah, these immediate things.
So those are the first ones we look for. And they're usually the easiest to identify because most of you out there running a business know that, I need these tools in order to, repair air conditioners, or I have to have this software in order to dispatch my people to job sites. So those are the obvious ones. We like to then get into the rest of what everybody likes to think of as what can I write off? Let's talk about some common ones. Cell phones.
Yeah. Advertising
costs, whether it's your, I don't know, do we still use business cards in this world? I think some people do. Business cards, website development, direct advertising online, paying a service.
Advertisements on Instagram, on Facebook.
Exactly. So advertising, your telephone situation, there's
internet, all those things.
Then we get into the ones that I think are where people think are very, of course, you talked about the car. Is a car always something where I can buy a truck and write this off on my business 100%? And this is where we get a little questionable. And we tell people the general rule is if you can justify more than 50% business use of your vehicle, it does make sense to, have that asset on your books, depreciate it.
Exactly.
But it doesn't get you around some of the other obligations because you can't just, I get a lot of people be like, well, automobile expenses, here's all my car payments and my insurance and all of that. And you can't just deduct that. No. So, and like when we start talking about vehicles, we have to look at the tax code around that and actual expenses versus mileage, and people don't realize how crucial it is to track mileage
and how much detail is needed. Record keeping to be able to substantiate that use.
Right, and because it's such again another one of those highly auditable expenses, we try and get a little bit into the weeds of, look, if you want to be able to do this, we need to be able to justify these things. You need to keep these types of records because in an audit, without it, they're just going to take it away.
Right.
So we don't want those things to happen. So don't assume that you can just write off your car payments and write off your gas. And it doesn't mean that they're not, you can't, if your car is owned by the business, of course you can, pay for your car out of your business.
Yeah.
But it's how it's tracked. It's how you're keeping that information organized.
How you're using the vehicle, all those things.
Yeah. And another one, people be like, well, I drive from home all the time, but commuting is not business travel, So we have to get into really looking at what constitutes business use of a vehicle. Yeah. So there is a lot of rules and regulations around that. So while it's commonly used and discussed, it's almost 90% of the time, I would say, even more, misused because people aren't using it right or they're over deducting for those things.
Exactly.
For bad information. Meals. Well, meals and entertainment, that's what people call it because in history, it was always been bundled meals and entertainment. But as some of you may or may not know, and this is going back a good 8 years now or so, but the original job cuts and the Tax Cuts and Jobs Act, sorry about that, had to spit out that tongue twister, eliminated entertainment as a deduction.
In its entirety.
Yeah. So, and I really, really hurt some of our industries out there especially ones that are common sole proprietors, like real estate agents.
That thrive on the commingling of people.
And salespeople, because
selling themselves through those engagements.
Those days of going and making deals on the golf course are just gone. And and they were convenient because it put people in neutral locations, and it was better than the office. And people have to come to terms with a lot of that stuff we used to do is no longer tax deductible. Now, it doesn't mean it's not reasonable and ordinary.
Right.
So people question, well, it is ordinary in my industry to do this. It is reasonable. And in that regard, you can pay for those expenses. You can still take people out, play golf. And on your P&L, you can show it as an expense. The problem is when you do your taxes, it's not tax deductible.
Correct.
And that's understanding, your business can have expenses that aren't tax deductible. So, and I think
exactly like meals. Right now, they're only 50% deductible. So you could still have business meals that are business, minded, but say you spent $10,000, you only get the $5,000 deduction for it when it comes to your tax return.
Exactly. And there's a lot of rules around meals. It's not grocery shopping.
No.
For your family. It's not taking your family out to
dinner.
Olive Garden.
Yes.
It's not.
Even though they have great breadsticks.
Yeah, they do have good breadsticks. I like their soup, but that's just me. Anyway, there are very specific rules around what qualifies as a business meal expense. We're probably not going to get into a lot of detail on that here because there is quite a few of them. And we're outside of the COVID days where they temporarily, for a few years, we were able to deduct 100% of those business meals.
Right.
Now we're back to 50. So there's a lot more scrutiny around meals and what qualifies as a meal deduction. And just because you repair air conditioners and drive all day, it does not mean that your drive-through at Taco Bell is a tax write-off
every single day.
Every single day.
Right.
So getting more information and understanding those types of deductions is really important. It doesn't, and in a sole proprietor, they're just way more obvious, I think, than when we start getting into some of these other more complex structures and so forth.
Agreed.
Yeah.
What about people using, say, the regular, we'll go back to the salsa maker. What if they have to use their office at their home to, make the salsa, prep labels, clean all this stuff, do all their business financials that they're keeping so good record keeping of?
Let's talk about that home office deduction. A very common Schedule C tax deduction. If you've ever examined a Schedule C, there's a right at the bottom that has home office deduction, and you'll learn in future episodes that this home office deduction does not necessarily apply to every other entity type. They are handled differently, so it's quite interesting. But in a sole proprietorship is quite common, because most small businesses that run like that tend to have a home office. Now, what is a home office? Salsa maker. You use your kitchen island.
Yep.
You do that.
Some of my fridge.
Store in your fridge. Is that all considered business use?
No.
But the biggest thing about using business use of your home is really the official words for it instead of or home office is having a dedicated
100% of the time
space used for your business. So, what the IRS means by that is, you'll see more common now, a lot of houses have separate home offices or separate space. I know you have one, I have one, and that's dedicated space is just used for us to work from home, but not everybody has that luxury. They live in an apartment and they use their bedroom or something like that, and they feel, in the way they feel is the space is should be able to write off a portion of their rent or this, and the problem with that is if it's not dedicated space, it's technically not a legitimate write-off.
Right.
I get plenty of people that tell me they want to use 50% of their home for business because they store product in their dining room and they do this. But these multi-purpose spaces
have other reasonings. You're eating dinner in your dining room. You're watching TV in your living room. It can't just be.
So business use of home in its truest fashion really has to be a dedicated space you use for your business. Does a spare bedroom qualify? Sure. If you use that spare bedroom exclusively as an office, as many people do, I think these days usually have a extra bedroom and that becomes their home office. That's great. Yes. And what do you need to know to take that home office deduction?
Yeah.
You know, we need to know how many square feet is the space.
Yep.
How many square feet is your total home?
Yep.
We look at, you know, whether you pay rent, you pay mortgage interest, your utilities, and then basically factor in a percentage
of that expenses.
Based on the size of your office.
Yep.
Now, back, I know when I started in getting into a lot of this stuff 20-something years ago, home offices were considered a red flag. You'll hear us talk about red flags throughout things. You know, people are like, oh, I don't want to do that because it's a red flag with the IRS. And that's not so much the case anymore.
No.
It's become a lot more common, a lot more accepted. So the old theories around home offices being red flags on taxes is not true. But what is true is it's still highly auditable. So just like meals and vehicles and home office, because there are so many rules and regulations around them, in an audit, they tend to be the first three things that an auditor is going to look at.
Yeah.
Right? Because they know, you know, most people are going to fluff their meals and they're going to fluff their mileage, or they're not going to have the proper documentation.
Right.
Have kept proper records, as we talked about a lot. So they are highly auditable. So they are the first things people go after, but it doesn't mean don't use them.
Right.
We want people to use them because they should be there, but we want you to use them properly. Meaning, if it doesn't mean that you took the deduction, it's not accurate, but can you prove it? Can you document it?
Justify it.
You know, I even have, you know, for me personally, I have a home office, and when I first set it up, I took pictures.
Yep.
Of my home office, how everything is set up, nothing in there but my desks and my computers and all of that. And I keep those because in an audit, I want to be able to reference back that this is my office.
It's only solely been my office.
Yeah. So there's some little basic tips and tricks we try to give people that say, look, let's so we can prevent this from being an issue.
Yeah.
Even if you're being 100% honest, or you feel you're being 100% honest.
Yeah.
If you can't provide the proper documentation in an audit, they can still take that away from you. So there's just these little tips and tricks around these regulations that we try and tell people that if you comply with these, and then we can use these deductions, and it's very common in sole proprietorships.
Right. Yeah. Well, we see a lot. They're off the ground. They're barely getting going. They need somewhere to run their business. They're not going to go out and rent something from a very large, you know, structure or, you know, business building for all this money a month when they're just trying to get things going. Those are all most common deductions. We hear about a ton, and it's not saying that you should ever shy away from any deductions. We just have to make sure that they are, you know, ordinary, necessary, and justifiable. So in the event of an audit, you're on the greener side of the grass than on the...
Yeah. So that's good, like, generic background on sole proprietorships and some examples of what they are and how they're used, some advantages, disadvantages.
Right.
Common deductions, record keeping. Let's talk about some of the fun stuff. We like to talk about the myths.
Yes.
The falsehoods, the tales.
These are the things that we get all the time.
These are the things I think that people put out there as this is law. This is the golden rule, and they're really not. You know, the one we were talking about, meals, like one of my favorites is you could deduct 100% of your meals. Doesn't matter who you're with. Just, you know.
As long as you're spending money on food, you should be able to deduct it.
Exactly. And there is up-teen videos out there, I know, and information that's basically declaring, keep all your meal receipts and everything's deductible. That is just not true. We talked, obviously, about some of the rules around that and how in an audit, one of the number one things that is looked at. And that doesn't mean don't take the meal deductions, but what is the IRS actually looking for?
Agreed. Yeah. What is it that they're looking for?
Receipts. God, I know we all hate receipts.
I know.
Just because you have a bank statement, that is not our IRS compliant documentation.
Nope.
They want receipts. So if you're not good at keeping receipts, we highly suggest that you find a good technology way of taking pictures or tracking and storing them, because a shoebox is, in this day and age, isn't going to work. Those heat paper, what do they call that?
Oh, yeah.
Thermal paper.
Thermal paper.
And
thermal paper.
It fades in like 3 months and you can't read anything. So,
but even on top of that, just having the receipts, the IRS still wants more information.
Right. They want to know who you were with, what the business purpose was. You know, they want that type of context. Now, I don't know about you, but I not only don't remember what I ate or who I was with, I don't remember necessarily what we talked about. So typically, I know what we'll do is we'll take that receipt, we'll flip it over, we'll jot a couple notes, we snap a picture of it, and it's gone. You know, and then we have our justification. So simple way to get around some of that, but don't get trapped in the myth that 100% of everything is tax deductible.
Right.
We do get a lot of salespeople. They do have high meals and stuff, and you know, sometimes even into the tune of $20,000, $30,000 a year, because that's what they do a lot. They take people out to eat and all that kind of stuff.